What's up, traders? Welcome back to the channel. Let's go ahead and discuss the S&P 500. We are going to get into Bitcoin here in a little bit, but first there's a few things that we need to discuss. We'll talk about the S&P 500 and we're going to talk about the Fed speech that we seen yesterday from the Jackson Hole Symposium. First and foremost, the S&P 500 expected move next week. For anybody that's new and don't know how I come about the expected move, it's simply what the options market is pricing in. Looking at the IV, looking at what the IV is expecting the move to be, and then plotting those lines by myself. This isn't an indicator or anything. But anyways, an $82 move from Friday's close up will have you at 57.16, which would also, if we were to tag the upper edge of the expected move next week, we would be making fresh all-time highs. And also something of note, which is important, Friday we did in fact close above the highest weekly close of all time. So that means we have a fresh all-time high week close. And then the bottom edge of your expected move is 5552 spot 60. We'll see if we can trade down to this area. Seeing how Q2 2024's high is right in here. It did act as support right there. It acted as resistance right here. All right, so you got resistance, support, then we closed right at it here, rejected the high week expected move through August the 1st, and then we started to see that move lower. So this level right here, if we do pull back, instead of looking for long entries right at the lower edge of the expected move, I would probably look for a tag of the Q2 2024 high. That is at $5,523.64 or 5523 spot 64. That is an objective level. That's not my level. That's the market's level. And like I said, we know for a fact that this level is important and it has acted as resistance and support. And you can see with this breakout candle right here that we got previously that this candle basically made that level the midpoint of its range. That's generally a good indication that a level is validated as a support or resistance. So basically what I want to see next week is I want to see price trade down to this level. And then if it acts as support in here, then I could potentially look to sell calls at like 5,400 or 5,300 and look for that move back to the upside. All right. As of right now, I don't see anything that makes me bearish, and the speech is also pretty bullish. But anyways, let's go to the weekly time frame real quick because I do want to just discuss something real quick. Everybody is expecting this to just be a pullback, and they're looking for a 2000 or 2008 style bear market. And the one thing I want to show you that was different back in those times is simple. Look at the moving average structure here, how price had retested the 21 exponential on so many occasions throughout this period of time here, almost a year. You were literally fighting with the 50 and the 21 exponential moving averages almost all the way until when you finally ultimately lost the moving averages here and then they acted as resistance. We're not doing anything like this right now. Why am I even bringing this up? Because it's in the past. This calls into question the strength of trend. Your strength of trend is not really strong here when price is continuously bouncing up and back and forth with these moving averages. That's what I want to show you. If we go over here and look at 2007, now the trend was 2007, 2008, the trend was a little bit stronger with just a few corrections pulling back to those two moving averages. But once again, once you started to get to the top or you started to look a little bit toppy, notice how far away price was from the 21. There's a peak there, there's a peak there, there's your all-time high, there's your old all-time high. You're not very far from those moving averages when price ultimately rolled over. So we use moving averages to show us direction of trend and trend strength. So coming over here, we've tested the moving average here, but we stayed pretty far away from it throughout the entirety of this move higher. So we had a pullback, tested a 21, and then we finally had a deeper correction here. And this correction was only 9.75%. It wasn't quite 10%. So nowhere even near bear market territory. It was literally just corrective in nature, and boom, right back up. We did breach below the 21, but you never closed a weekly under the 21. That's what kept us so cautious about getting it really bearish, because we had not yet closed a weekly under the 21. And until that happens, I cannot get bearish on an obvious, strong bullish market. Notice you never tested the 50. In fact, the last time you tested the 50 exponential weekly moving average on the S&P 500 was back here in October of 2023. And in this part of price action, we still had not made a fresh all-time high from the bear market that we saw. In fact, this was a breach above the 618 retracement, and sellers stepped right back up again, only to make an ultimate buying opportunity and forcing prices right through all the stops sitting at 4,600, and once again, all the stops above 4,800. And then it had been a rip your face off rally ever since. That's the last time you tested the 50 exponential moving average on the weekly time frame. So all I'm trying to convey to you is the strength of this trend. It is very bullish. Could that change next week? Could we see a dump? Yes, obviously we could. Now let's go look at the speech by Powell. Sorry, bright screen with inflation going down and continuing to trend lower. And with the jobs number or the unemployment number going up, that's definitely going to help inflation. So they will start dialing back the restrictive policy that we currently have. So the time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. So right there, he's telling you that they are going to start cutting interest rates, and that essentially is going to be to stop the unemployment number from getting out of hand. Now I'm going to switch to the big screen up here because I want you to see that even though we've made a fresh high week close on the S&P 500, as you can see with Microsoft, Apple, and Nvidia being the three biggest market cap stocks in the S&P 500, none of them have made a fresh weekly high close. All right, now Nvidia is really close to testing the high week close, but it hasn't made one yet. With Amazon, Google, and Tesla all lagging tremendously, right? You're not even close to your high week close. So if we are going to see a rotation from value, which is where the S&P 500 is getting its strength, then we could potentially see this as being an opportunity. As I spoke last week in last week's upload, I think your best opportunity would be in Google, as it is lower, but Meta has tested its high week close. It tested it the previous week and it tested it last week. Netflix is not in the Magnificent Seven. Netflix was included in the FANG stocks. And obviously Tesla is bearish on the year. So Tesla is not even in the conversation. So let's go look at value real quick and then we'll talk about Bitcoin. I'll wrap this up. Value is literally making fresh all-time highs and smashing through the high week close. It just opened Monday and went higher, and it closed on highs as well. So this is the Vanguard Value ETF. People are literally buying up value. Here's the Spider Value ETF, smashed right through the high week close, set a new high week close. That's basically what's going on inside the broader market. Let me go over here and do this real quick. This dude here, Blanc, I don't know this person, but he said, can we please stop calling this clean downtrend a range? And Jordan simply said, I see price exactly where it was 6 months ago, and price on the right side of the chart higher than the left. But this chart basically says everything. This is a 6-month chart. Each year is made up of 2 halves, and inside of those halves you have quarters. And that's essentially how bigger market participants look at the market. They look at it in terms of halves and quarters, maybe months. I'm talking about those, several billion-dollar investments that are being made by huge money managers. They're not trading on an intraday basis, and they're not trading on a daily basis. They're trading on a quarterly, half-yearly basis, monthly at the smallest. But anyway, 6-month chart. This is your 2024 yearly opening range right here. As you can see, the first half of 2024 is a clear breakout. So if you look at this as resistance, which we do, that's the way we operate here in this channel, closes our resistance. That is a clear, strong breakout, and you closed almost on highs. That looks good. That's a very strong candle. Now, if we look at where we've been on the second half of the year. Here is the high of the first half. Here is the low of the first half. What you have clearly is an inside range. This is an inside candle. You did not take out the first half's high. You have not taken out the first half's low. You are trading inside of it. That is the very definition of a range. So right here, when Jordan says, I see price exactly where it was 6 months ago, literally, he is telling the truth. Now, if we go over here and we look at the 6-month chart right now on Bitcoin, get rid of all the lines, you can see that now we aren't even bearish on that 6-month candle. We have broken above the open of this second half. This is good. This is constructive price action on a larger time frame. Very, very constructive. When Bitcoin was trading below monthly support, I essentially said I wanted to see Bitcoin break above this candle's close right here and close strongly above it. That's exactly what we got yesterday. This is a breakout above this candle's open or close, and it closed strong. Strong on the day and, right under the highs. You're probably going to try to short it right here based on old support, based on this supply zone, and one could potentially look for shorts there if you're still in the camp that thinks you're in a bear market. I hope I have shown you that you are not in a bear market on risk markets and you are not in a bear market on Bitcoin. Bitcoin is literally in a half-year range. It's simply sideways. It is in a range. And since it's in a range up on and near the highs, it's actually more of a bull flag. Some people are calling it a cup and handle. Whatever you want to call it, it's still a bullish formation. Whenever you consolidate gains, you typically look for the breakout to occur from the range in the direction you were coming when you made the range. So if we look at the range, what direction were we moving when we made the range? Well, we were moving higher. So we have consolidated for 6 months, almost here, 7 months, whatever. So we would look for the breakout to occur to the upside. Now, if we did this down on the lows, then we would be looking for a breakdown. All you got to do is look at almost every single bear market in Bitcoin's history. But we'll just go back to the big one when we made the all-time high of $20,000. Notice how you ripped to the downside. I mean, that was a very fast move. Then you consolidated sideways around the lows. And what happened? You got another breakdown. So that's when you're looking for breakdowns in consolidation formations. However, we don't know what's going to happen in the future, and we don't know if we're going to get a recession. If we do get a recession, then it would be good to hedge your Bitcoin position. You can simply short CoinM futures perpetual swap contracts. If you think the market's going to roll over, just use a small portion of your portfolio to do that. But as of right now, Bitcoin is moving exactly the way I want to see it move. Also, we were struggling to close the weekly back above the 21 exponential moving average. Look where the 21 exponential moving average is right now on Saturday. It is the midpoint of this candle. Therefore, it looks like a legit breakout or break back above to me. So I will be looking for bullish entries if we close here or above the 21 exponential moving average tomorrow night. All right. So with that being said, that's what I'm going to be looking for. I'm going to be looking for bullish movements or bullish entries close to daily lows or next week's low if possible. And then finally, here's a short position I took here with the USD versus the Canadian dollar. I took it on this because the Japanese yen, USD yen, had already had such a significant move lower, and I was continuing to expect dollar weakness. So I decided to get short right here. When we bounced from a support zone, I got short on this red day right here on this day. Now, at that point in time, I was only looking for a day trade scalp, so I was only looking to scalp it down. It was only about 12 or 15 pips. It was a very small range that day, but I was looking for the lows to get swept. And then I was taking profits there, and my stop is setting at better than break even. Thank you guys so much for your time. Make sure you guys subscribe if you haven't yet. Hit the like button, smash the notification bell, do all that good stuff that every other YouTuber on the face of the planet tells you to do. And I will see you on Monday. Thank you guys. Have a great day. Make sure you all trade safe, trade smart, and as always, happy trading.